Hello, Anthony.
Hello, Claudine.
We're joined today by Keith Redmond, American Overseas Global Advocate. Keith, thank you so much for joining us today.
Well, thank you for the invitation again.
Of
Appreciate it.
course. We're talking today about common myths about Americans living overseas. And we want to get your perspective since you do so much work with this group of people. First, Anthony, I want to start with you. How do these tax issues differ from homeland American tax issues?
Well, I would say this. We are on the cusp of learning what the tax reform package is going to be. And part of the tax reform package is perhaps that switch to territorial tax for individuals. And if that changes, Americans overseas will no longer have to worry about filing their typical return they do. If they have U.S. source income, they might still have to file a 1040 NR, but a lot of the hassle and burdens will be gone. So it's going to be very interesting to see. I think tomorrow is the day it's going to be coming out. So pretty excited about that. But this is what we're really talking about is that, if you are a U.S. person, the territorial tax change for you, it's not going to affect that much.
All right.
So it's really the people who are living overseas.
Okay.
They're going to be the primary beneficiaries of it.
Keith, my first question about this goes to you. The foreign earned income exclusion allows $100,000 US to be tax-free. True or false?
Well, it depends on what perspective one is looking at it. And mind you, let me qualify how I respond is that I'm going by the response on the system that we have at present because nothing has changed. And the U.S. practices uniquely, aside from a small African country of Eritrea, citizenship-based taxation. So for the foreign earned income exclusion, the first $100,000 is tax-free really is false because it may be, quote-unquote, tax-free where it's not included in paying taxes in the United States, but the American overseas has to pay tax on that money where they live. And oftentimes they live in a country where the tax is greater than if they were living in the United States, for example, or France, Germany, Sweden, Australia, etc. So it's a misnomer to say that they get tax-free income. They do not.
Yeah, and
now,
I would say that's
a rare exception.
Yep.
I think Anthony, you might want to.
Yeah, I could just think of one exception is Dubai. Dubai doesn't have an income tax, so your first $100,000 in Dubai is going to be tax free to the U.S. But if you know anything about Dubai, you know its cost of living is rather insane. A bottle of water is going to cost you $10. So if you actually were able to live on $100,000 a year, you have figured out some sort of miracle. And why keep that miracle to yourself? It is really, really expensive there. You know, a family making $250,000 in Dubai is sort of middle class. That's what, and hopefully you got a deal on your place. And so at $250,000, you're paying. You know, now the foreign income exclusion is no longer applying, and when you're paying your U.S. taxes, you have no foreign credit that you're paying to Dubai, so you're paying the bulk of it to the U.S.
Okay. All right, Keith, question number 2. U.S. tax treaties, and this is linked very similarly, U.S. tax treaties eliminate double taxation. True or false?
That is false because that's such an emphatic statement. Does it, with some of the tax treaties, mitigate double taxation? Absolutely. But does it eliminate? No, not at all. We're talking about oftentimes two different tax systems. You have the U.S. tax system, they're apples, and you have the French or German tax system, for example, and they're oranges. And trying to be able to not so much mesh the two together, but be able to recognize one thing in one tax system. In this instance, it's going to be, let's say, I'll just use France as an example, the French tax system against the U.S. tax system. It doesn't always work. You have situations where, for example, right now there are two key French income taxes. There are obligatory taxes that one has to pay to France, which are not recognized by the IRS. Therefore, you cannot apply a foreign tax credit. Therefore, if you happen to be making over the foreign earned income exclusion, you are doubly taxed on that money.
Oh, okay.
There are other situations where you could have a retirement or investment account in a particular country. And if that investment or retirement account is not recognized by the IRS, can be doubly taxed on that, where it's a tax-deferred account in your country, but if the IRS does not recognize it, you're going to be taxed going in and going out of that investment. So there's various situations where one does pay double tax. I've had that situation myself.
Yeah, and
so I'm certainly a witness to that.
Yeah, and there's
I think it's really important. I think it's just really important to stress that yes, it can mitigate, but it does not eliminate, and those double taxes can be quite prohibitive for many people. Sorry, Anthony.
Oh, no problem, Keith. Well, I do get excited about it. When you look at they're all sort of titled the tax treaty to eliminate double taxation, and they have all this great language. Well, whatever the tax treaty says doesn't really matter all that much typically, because you have the savings clause that will undo a lot of the benefits of the tax treaty. So it's sort of this mirage that you're getting, because when you get down to it, you're really not allowed to it. And right now there is that case, Eschel, which is floating around the tax court, I believe. It might have gone up to the D.C. Court of Appeals, where the taxpayers were trying to get that, I think that one of those credits you were mentioning in France, saying that should be applied as an income tax credit. So it gets down to this, well, is that Social Security or income tax? How does France decide it? And then I think somehow we found out in France they don't know either. That they're not sure how to define it either, and so people are going around with their hands up like, well, what is it? Is this something that is?
Yeah,
it's
comparing apples and oranges.
Right. That's yeah. It's absolutely a tax that somebody paid. Now, does it count as a tax that can be applied to the credit? And a lot of people get surprised with it. So it's absolutely true that you can be subject to double taxation in many, many different cases. And you're sitting, a lot of, this is the other thing too, a lot of savings investments, it's not exactly related, but a lot of savings investments, retirement accounts that are tax-free in the country. We have your superannuations in Australia. You have various types of things where your income is deferred. Don't necessarily expect that the IRS is going to look at those as tax deferred just because they are in the country that they're located in. So a lot of other nasty surprises on that too.
All right, Keith, I know my opinion on the next question, but I'll ask you. More and more people are giving up, renouncing their U.S. citizenship, which we know from Donna Lane in the FATCA hearings can be extremely emotional.
Yes.
So Americans living overseas are renouncing their citizenship because they don't want to pay taxes. True or false?
That is unequivocally false.
Really? They're not tax cheats?
I concur.
Yeah, and I think it's a major problem in the United States with not everyone, but with a certain number of homeland Americans as well as homeland American journalists, where they like to put this out there that they don't want to pay taxes. And I think it's important for people to realize that the U.S. is not the only country that taxes its citizens. You actually get taxed in other countries and a lot higher than in the U.S. Again, in France, Australia, Japan, Germany, Sweden, et cetera, they have their equivalents of the IRS as well. So when you have a person that is living, let's say, and I'm just using France as an example, but it could be Germany, it could be Japan, it could be anywhere else, and they're living there and they're paying tax where they live. And all of a sudden they get a letter from their bank that is for the Foreign Account Tax Compliance Act, FATCA. And they get a letter from their bank saying that their bank accounts are being closed because they happen to be a U.S. citizen or a U.S. person. You have that as one situation why an American would renounce, because they have to bank where they live. They have to bank where they live. That's just a fact. It's like, you guys in the States not being able to bank anywhere where you live. Right. It's an impossible situation. That's number one. Number two is that the American overseas, the way they have to file, and Anthony, you can talk about this a bit further, and the punitive measures, if anything is wrong, in filing with the United States, with the IRS, it's too much. It's too much. They're already dealing with their local country's tax system. And to add the burden, and it is a burden, and it's an albatross, of putting on the U.S. tax system where they don't even live, creates a major problem. They can't save for retirement. They can't save, period. And so you have those two things going on. And then the ironic thing is the majority, the vast majority of Americans who renounce are U.S. tax compliant. It has nothing to do with their compliance. They are compliant when they renounce. Do you have to be compliant to renounce? No, they're two different statutes. But they are compliant when they renounce because it just makes it a lot easier moving forward. So that is my answer in regards to why it is false. It has nothing to do about not wanting to pay taxes.
Yeah, and I would just cover up on when you do expatriate, you file you can file the certification with the IRS that you've been in compliance for the past 5 years, or you don't. Now, if you don't file that form with the IRS, what happens is that you're a covered expatriate, and that means is that you have exposure in the future to some point, the IRS deciding that you owe money to them or not. Now, this is an issue where and then where I'm a U.S. tax professional, so I always advise compliance. So someone else could, if they want to look into the what the consequences would be if they renounce without a certification, knock yourself out. But you don't need to file that form with the IRS in order to renounce. You can simply do it and then just say, well, come get me wherever you want to.
Exactly. And I do deal with people in that type of situation, and each case has to be weighted on its own merits. And as a tax professional, I certainly understand you can't advocate for that. But for me, with the work that I've been doing, there are instances where it's best for the person to renounce without becoming U.S. tax compliant, because they will lose everything in the immediate, everything, their retirement, their savings. I've seen it. And sometimes the risk is better moving forward, especially if they have zero connection to the United States and will never return or have never lived in the United States. So there's a lot of gray area there. The last point, and I think it's really important, is, and this is a misnomer as well, Americans who are renouncing their citizenship are not doing this gladly. It is very much with a heavy heart.
Yeah.
You bring up Donna Lane Nelson, whom I know personally. It was with a heavy heart that she did. She actually got physically sick as a result. Yeah. Another gentleman, Daniel Kutel, who served our country, he did not want to give up his citizenship, but nobody in the United States would help him.
Right. It's not like they're not patriotic. It's not that they're not supporting the
patriot or patriotic. It has
patriotic.
Nothing to do with it.
Yeah.
Nothing whatsoever. It's about living a normal life and living, ironically, in freedom, and to be able to live where they are living without the punitive measures of the IRS when it comes to being an American living overseas. And I think this is something that really needs to be driven home to a number of homeland Americans and homeland American journalists who write about Americans overseas.
Yes, and I think that sort of leads me into my next question for you, because I've seen some Twitter wars, and you always invite these people to come on a podcast, and rarely have they ever said yes. So my next question for you, Keith, is accidental Americans must enter the U.S. tax compliance system. True or false?
Yeah, well, I will give you my opinion is not something that I came to overnight. I've been working with accidental Americans, and also there's an association of accidental Americans in Paris that is false for the work that I do. I think let me explain what an accidental American is. I'll take one gentleman, Fabien Laagre. He's a French guy, and he's the one who founded the Association of Accidental Americans in France. He was born, if I have this correct, he was born in the U.S. to non-American parents, and he left the U.S. in diapers, and he went to France, and he has no U.S. passport, Social Security number, no link to the United States. He is French. He only speaks French, and has been educated and works in France, makes his income in France, etc. he gets a letter from the bank, the FACTA letter, the Foreign Account Tax Compliance Act, stating that he's been identified as a U.S. person and that he either needs to supply a Social Security number from the United States or a certificate of loss of nationality. And that is, and so as a result, if he doesn't supply that, then his accounts will be closed.
Right.
His local accounts will be closed. And so what we tell these accidental Americans is to try to self-certify with their bank that they are not American. Sometimes that works, sometimes it doesn't. There is a self-certification clause in the intergovernmental agreements, FACTA intergovernmental agreements. If they are not able to do that, then sometimes they will obtain a Social Security number in order to satisfy their banks. That's it. But they will not, and I counsel them to not, depending on their particular situation, to not enter the U.S. tax compliance system. I have seen people, accidental Americans, try to enter the system. They don't even speak English. They try to fill out forms that are not in their language, and the IRS, as a result of them doing it without any advice, has started to try to come after them. And I've had to put a couple of them in contact with the IRS taxpayer advocate to get them out of this situation.
Right.
So, from a practical, pragmatic standpoint, generally speaking, why would you enter a country's tax system where you have zero link aside from the unfortunate life event of being born in that country and leaving in diapers? It does not make sense. Now, last point is that each case needs to be weighted on its own merits, but I'm speaking from a general standpoint.
Okay.
Well, this is some of the, when you really get to this point, it gets really, really obnoxious when you think about what the law is and how things are set up. When you are a tax filer with the IRS, you are ultimately responsible for everything you put on your tax return. You cannot delegate this duty to anybody. You could say, look, I don't understand any of this. I want to use this person as the expert. I trust them as the expert. It doesn't matter what that expert does, how much expertise they have or don't have. You are the one who signs on that return always. So I was thinking about Fabian because I think you shared the interview he had on Channel 1.
Well, he's been on a number of different interviews. So
yeah,
I can't remember which one.
His French is impeccable.
Well, yeah, considering he's a Frenchman.
Right, yeah, exactly. So he's on there, and I was watching that, and I was thinking, I'm like, wait a second. As a French-speaking person, if you are a French-speaking person, you cannot delegate your duty to know about the taxes to anybody else, really. So, okay, let me go to irs.gov to get the French instructions for Form 1040. And I searched it, and it came up nothing. And they all come up nothing. So the fact is...
Well, what about German?
There's nothing in German. There's Spanish, and that's it. There's English and Spanish instructions, and that's it.
You mean that for these accidental Americans, they cannot look at this information in their native tongue?
They cannot look at this information in their native language and make their own determination about what their requirements are. It's impossible. It doesn't exist. They would always have to use a translation service, but that translation service may make a mistake, right? So they can't rely on that. So this is where I'm saying, you guys, you don't even have it in all the languages that you're requiring people to follow. And that's just where you this is insane.
Wow.
So you've created a trap for these people. Well, so let me get this straight. So it's not in the language that I understand, but I can't really rely on an expert as giving me advice. So what am I really supposed to do here? So maybe I just won't enter the system at all. Maybe that is a solution. Now, again, as a tax professional, I don't say that, but... Keith,
but
you do say it.
Out there, the absurdity of
it's completely insane, right? Completely insane.
Yeah.
And it is
Well,
it is sort of weird too. I mean, just as a general aside, I mean, if there's a lot of French-speaking people in the U.S. There's they didn't bother to interpret these. Well, there's a reason why, because there's so much of it. I mean, because you would have to do it for every form out there. Every form out there would have to be interpreted into another language, because the IRS code is just far too big, because it's not about raising revenue, it's about control.
All right, so next question for you, Keith. The IRS will come after you in your country of residence and block your bank accounts if you have IRS issues. True or false?
That is false. That is false. I have spoken with various tax authorities in key countries around the globe. Key countries, and what I mean by key countries, France, UK, et cetera.
Mm-hmm.
And I think there's a number of things going on right now. Number one, FATCA, the Foreign Account Tax Compliance Act, has really, in some ways, been forced on these countries with the threat of almost being shut out of the U.S. Financial system, the threat of the 30% withholding penalty. And with the false promise of the United States to reciprocate with its citizens living in the United States, which is not being done. So these countries are not very happy, with the U.S., understandably so. And even though they do have to have their financial institutions sort through the data, put it together, send to their respective tax authorities on one particular agreement, whereas other countries have to do it directly to the IRS. They go through their tax authorities to the IRS, which is a lot of time and a lot of money. And so these tax authorities are not real, how would I say, interested or willing to do the IRS bidding, most especially on their own citizens.
Right.
And for the IRS, are they really going to come to a country with someone who's making maybe $60,000 a year to go after them because they haven't filed taxes they didn't know they needed to file in the first place and try to block their accounts? There are local laws in countries which protect citizens in that country. So it's a really tall order to expect the IRS is going to come, figuratively knocking on your door to close your accounts. I mean, there needs to be criminal intent. And Americans overseas, accidental Americans, are not criminals.
Right.
Contrary to what, I'm sorry to say this, Anthony, but contrary to what some in the U.S. tax compliance industry would like them to believe that they are criminals, they are not. So it is false. They're not going to come after you and close or block your bank account where you are.
Well, if I could just add, there are some situations where we have had people call us to say that an account has been frozen due to FATCA noncompliance, FATCA noncompliance, where the people haven't responded to the FATCA letter. I'm trying to think.
Different.
Yeah, that's the different situation we're talking about. What I think what you're answering is, if you run up a tax debt, will the IRS come track you down in the country you are? Now, there are the countries that have the reciprocal enforcement agreements. Mutual assistance, Canada, Denmark, France, and Japan is just started, I think. They have the mutual assistance program. If you run up a tax debt, that they can collect it. You do have that. But again, if it's something where, if you're an accidental American, I wouldn't worry about it too much. If you were born in the U.S., it could happen that they do.
If you have U.S. accounts.
If you have,
you think?
Yeah.
Well, that's different. If you have accounts in the U.S., that's going to be fair game.
Right.
But what I'm saying is somebody who has lived outside the United States for 30, 40 years, or is an American who is a known American who has never lived in the United States.
Yep.
Are they going to come and they're going to shut down your bank account where you live in France and Germany because you haven't paid a country where you don't live? I think there's also a return on an investment that the IRS is going to have to take a look at. Are they going to actually pay for the resources, the manpower, to go after someone who's only making $60,000 a year? How much money are they going to get out versus the amount of money spent going after somebody like that?
Yes.
So
I
it
think
needs to be something that it needs to be looked at from a pragmatic, practical standpoint versus the fear, the culture of fear that is promulgated out there.
So then I assume that I know the answer to your next question, that if you're not U.S. tax compliant, the IRS will treat you as a criminal and actually put you in jail. True or false?
Well, I'm sure Anthony can elaborate more on that, but that is false. You are not a criminal if you are an American overseas or an accidental American and have not been compliant with the U.S. tax system, that is not a criminal action. Now, under IRS eyes or with IRS eyes, it's a problem, but no, you're not going to go to jail. Anthony, is there anything you want to elaborate
Well,
on
I would
that?
say, I mean, well, I think you get down to a practical application of the law, because if you think about it, that, what is it, what is the charge here? Intent to defraud the United States government. Well, you knew you had an obligation, you owed something, and you're aware of the law and you didn't do it. So we have intent every which way. The issue is,
How do you know that they are aware of the law? Because the U.S. is the only country that practices citizenship-based taxation.
Because they listen to you. That's why.
What's
because they're big fans of Keith Redmond, and so they've learned it. You've underestimated your reach, Keith. You're a worldwide advocate, and everyone knows it.
Yeah, maybe so.
Yeah, so I would just say technically they are, that you're intentionally evading your tax. So that's what I would say, that's what the crime is. But it gets into a risk reward, as we were mentioning before. What are you going to do here? Are you really going to bring, now this is the thing most people don't understand about the criminal charges. When the jury sits on that trial, they don't know that they're sentencing the person to jail. They think the jury just thinks they're there to say, well, does this person owe the taxes or not? That's what they think they're there for. So it's a really lousy case to bring to a jury for someone who lives in France, say Fabian, to bring Fabian to first of all extradite him from France, to bring him in,
which wouldn't happen,
right?
Because France would not extradite.
Well, let's just say he finds himself in the U.S. and he's arrested at the border for some reason. They bring him in. The jury's going to be. This is what the jury's going to say. Wait, why does he have to pay taxes? Wait, they're like, that's not the law, though. What's that?
And why does he have an interpreter? What, he doesn't speak English?
That's right. Yeah. Why is he talking in French? This doesn't make any sense. No, he wouldn't. The jury would never convict on something like this. That's what I would say. He's like, these are lousy cases. The Department of Justice has room for about 3,000 tax indictments a year. That's been historical. What they want for.
And I have yet to see, Anthony, and from your experience, I've been working on this for a few years now. I have yet to see an American overseas or an accidental American being extradited back to the United States to serve, to be put on trial and sent to jail. Sorry. Have not.
I think I can think of, there's one I'm thinking of and I think there's one we were discussing about, but they might have messed, but I think they came back to the U.S. So no, they had investments in Israel, but right. I can't.
I'm assuming you'd have to be either extremely high profile
Right.
or extremely wealthy.
Well, or then when you're extremely high profile and extremely wealthy, you just pay for a pardon like Mark Rich did, who did evade taxes, and then he just got a pardon from Bill Clinton. So that was, he was big enough to get caught, but big enough to get out of it.
Oh, okay.
So that's not most people. So yeah, the government wants easy cases, and they're trying to grab a regular person from overseas on what basis? And you also have the IRS had to have some sort of reasonable cause for. There had to have been something to present to a grand jury to say, hey, this person probably evaded taxes.
Right.
What was there that was presented to the grand jury to get this indictment in the first place that would justify an extradition? So I would say
prove that it was willful. Prove that it was willful.
Right?
Yes.
You have the burden, right? And the government has the burden of proof. And I mean, you're talking about a real problem on the other end too, right? You're going to be that this is not if you went to France to argue for extradition, that's not your home turf, and they really might not like you in the U.S. The government gets a lot of privileges, right? The government in the courts, sometimes they seem like they're on the same team, well, maybe because their paychecks come from the same place. But good luck in France or anywhere else where you're not going to get any of the favoritism that you're given in America. So I'd say it's you would have to be doing something else to be extradited. You need to be doing something else, and they just slap on the tax because why not?
That makes sense. All right. So, Keith, there's been a lot of talk in the news lately. A new passport law passed. If you owe a certain amount of dollars to the IRS, they can revoke your passport. So if you're not U.S. tax compliant, some people are saying you cannot renew your U.S. passport. True or false?
Not at this point. Not at this point. I know many people, and I deal with a lot of people. I know many people who are, and I'm only speaking of Americans living overseas. I can't speak about homeland Americans. Americans overseas who have renewed their passport and who have not been tax compliant ever, and they've been living overseas for, again, 20, 30, some 40 years, and they've received their passport. The systems are not linked together. They are not linked together. I say that twice. I'll say it again. The systems are not linked together. And at this point, at this juncture, you can get your passport renewed, and you are not in even when you're not in the U.S. tax system.
Right.
That's a fact.
You have to be classified as seriously delinquent taxpayer in order to have your passport at risk. That means you owe $50,000 more. That means there's an assessment.
That's not even in place yet.
Right, and that's not even in place yet. But that's the first part. And they're going to start with just the not giving renewals or people who are seriously delinquent taxpayers. But if you have no debt assessed against you, you might be whatever. You're not anything. You're not there. They don't see you.
Think about it. And I don't mean to be stereotypical or chauvinistic, but think about it. You have a Frenchman. And again, I'm only using France as an example because I happen to be French as well. But you have a Frenchman, okay, and who's married to an American wife. And that American wife is a stay-at-home mom. She works at home, and she does a lot of hard work at home, raising kids and so forth. She has no income, nothing, zero, nothing, no name on anything. Why would she even be in the U.S. system? Do you see what I mean?
Mm-hmm.
So when she goes to get her passport, even if it was linked, they'll see that she's not in the U.S. system, but that can mean so many different things. She's a stay-at-home mom. She has nothing to claim. So would she be denied a passport? No.
No. Okay, and we sort of talked about this a little bit, but if you are not U.S. tax compliant, you can be arrested at the border when you enter the United States. True or false?
I have yet to hear of anyone who has not been U.S. tax compliant arrested at the border. And there are a lot of Americans overseas who have, and still do, who have no idea that they're supposed to be filing taxes or filing and possibly paying tax to the United States because they do it where they live. And they have entered many times and have left to go back to where they live without being arrested. That's a fear that is promulgated out there. No. Yeah. Anthony? And specifically about Americans overseas. I don't know of any.
I mean, it could happen, but Judge said you're going to be arrested for something else in tax compliance. You know, maybe you'll be arrested for something, you know. But, yeah.
I mean, they're going to catch you for drugs.
There's always going to be an exception.
Then,
you know, I think that, you know, no matter, you know, I think anything that we're saying, you're always going to find a rare exception where the IRS does something completely bizarre. But I don't think you want to make your life decisions based on the, you know, the exception that you can't control. It's about mitigating your risk and making a wise decision about what makes the best sense for you.
Yeah.
You know, some
people who are arrested, there's a lot of other things going on with them.
Yes, and their tax filing is the least of their concerns. It should really be the least of the concerns, but it's the easiest thing for the government to get.
Yes.
So they can get,
right. It's just, you didn't do this. And I mean, we did see this, yesterday. Paul Manafort's, that got him on FBARs.
Exactly. But here's the thing, and I tell people, like, there's people who are contacting me saying, oh, my God, the FBARs. He is a homeland American who did not report his foreign bank accounts to the Financial Crimes Enforcement Network at the Department of Justice. That is absolutely understandable. Some people may still think that the FBARs are unconstitutional. That's a whole other podcast. But he's a homeland American and did not report this. That's quite different than somebody who is an American living in Paris or wherever, Berlin, London, and did not report their local bank account that they walked to one block away to the Financial Crimes Enforcement Network at the Department of Justice. Completely two different situations. And I think that's what you're trying to say.
Yeah, well, Paul Manafort had $60 million or something, too. Or, so a little higher than your usual.
Maybe a little high profile,
a little higher,
too.
yeah. And I don't know, maybe he has a legal team to challenge the constitutionality of it. Maybe he will be the one to do it. I would say this, though, as we're looking at the tax reform, I haven't heard a peep about the FBAR being repealed, Title 31. So that's still going to be out there for expats or not. Now, I think it's probably another podcast whether or not expats should file an FBAR or not. So we won't just get into that, but that obligation will still be around. And I guess, that's the thing. If the government ever needs to arrest you for something, they have that. I mean, that's kind of how it is. Most people get away, you can get away without filing it. In the criminal charges you can get away with unless they need to indict you for some reason or another. Then they have that easy charge. Yeah.
Okay, Keith, my final question. Citizenship-based taxation means the Marines, like say you're in peril. You're living in Germany, you're in peril, and you need the Marines to come rescue you. Is that a free service?
That's right.
Absolutely not. And that's, again, and I'm sorry, I hate to use repeated words, but that's another myth that is promulgated out there, meaning that's pushed out there because for whatever the reason may be.
I think it's Cook versus
the
Tate.
idea of having the U.S. Marines coming to rescue you is a very neat thing to have, that they're going to come and sweep you up and take you back to the homeland.
Mm-hmm.
No. If they do it, you are going to have to pay them back. It even says it on the U.S. State Department website that you have to reimburse the United States government for any evacuation. There are some exceptions, for example, but there was some misinformation out there that those who were evacuated to Puerto Rico had to reimburse the U.S. government. That was false. That's not the case.
Okay,
I mean, they're U.S. citizens living on U.S. land, and that did not happen. But for Americans overseas, they have to pay for this service. The Marines even come to rescue you.
There's some handsome Marines in uniform out there. I'd be willing to pay a little bit at least.
Sure,
Well,
but would you be willing to, turn over your retirement
It's a
account,
lot.
your savings
Oh.
account?
Yeah, it's a lot of
So
money.
it's not a couple grand?
It's not like $500.
Oh, okay.
No, it's got to be a little bit more. Those Blackhawks.
Okay.
They're like $12,000 an hour to run.
I'm a sucker for a man in uniform.
One last point is, I was in Paris. During the Paris attacks, the terrorist attacks, and my local cafe down the street was attacked. I don't recall getting a knock on the door or a phone call from the United States government saying, we're here to come and rescue you.
That's a great point.
Yeah, and this all does come from Cook versus Tate, the 1924 Supreme Court case, where a very sloppy written opinion. It's hard to make heads or tails of it. A lot of passive voice used in it, where their justification why worldwide taxation exists is that kind of the military's all around there, the world, to help you out.
Okay.
So that's where I think a lot of this comes from. Oh well, that's this is you're subject to universal tax jurisdiction because the U.S. military will save you no matter where in the universe you are. Yeah, they'll save you after they charge you and you sign a promissory note. So we're missing that little bit of justification part.
All right.
Yeah.
All right, Keith, anything you want to add?
I think, I appreciate you guys inviting me to come on to this particular podcast to talk about the myths, because it is just something that is so important that the audience at large who does listen to this podcast really have an understanding of what is true and what is not true. And because it's something that has been, these myths have been out there for a number of years, and our objective is to really put an end to them and to move forward with what is real. So I thank you for that.
All right. Well, thanks a lot. And we will be. Claudine is back.
I'm back. Yeah, sorry. We might have black screen for the last 30 seconds, but we've got the volume, and that's all that matters.
That's all
Keith.
that matters.
So, I do want to thank you for taking the time to join us today. I know you're very, very passionate about this, and we really appreciate it. Facebook page. How can people find you?
Yeah, I think on Facebook at the moment you can go to the American Expatriates group.
Perfect.
And do a search, and you can take a look, and review the group, and actually join the group. It's open to Americans overseas, accidental Americans, green card holders living overseas, and homeland Americans who want to learn more on the tenuous situation that 9 million Americans overseas plus the associated affected populations find
Exactly.
themselves in.
Yep. I think the associated affected populations too, a lot of people don't think about. So again, thank you for bringing the attention to that. And as always, you're always welcome here, Keith. Thank you so much for joining us today.
Thank you.
Thank you. Thanks for watching.